Yeah, exactly. And thank you so much for having me. So Aker BP is, as you pointed out, a Norwegian pure play E&P company. We're solely focused on the Norwegian continental shelf, and we're currently producing at a run rate of roughly 481,000 barrels. I think the earnings, as you pointed out, is extremely positive. The underlying industrial performance is exceedingly good with 96% production efficiency. We're producing a lifting cost of roughly $5.6 per barrel, which is extremely good in an offshore environment. But probably most importantly in this day and age is that we only emit about 2.6 kilograms per barrel in carbon emissions, which actually puts us as a leader in the carbon emissions. And this quarter has been extremely good.
I know, Karl, you have some major decarbonization efforts underway within the business, but let me just round out the quarter. What have you seen in terms of cost inflation and the developments over the last 3 months? And I guess most importantly, what's the outlook?
Yeah, so we have, as you're probably aware, we've had quite an investment program coming on, and we made a significant investment decision in December last year, where we made investment decision for roughly $19 billion. And prior to that, we made quite a lot of in-depth understanding of what the outlook would look like. And right now, I would say that inflation has been largely in line with what we expected. There are some pluses and minuses, but it's not worse than what we expected. Actually, some of the later contracts we put out has been at a lower price point than expected in December. So it do seem like inflation is slowing down and that the cost is actually coming down. This is, of course, driven by activity programs, and particularly in Norway, as the vendors are filling up and their earnings are also going up, which is actually really positive. And then from an Aker BP perspective, we have this alliance model where we really want our vendors to earn money because it allows them to invest in their own companies, increase productivity rather, and also therefore increase our competitiveness.
Karl, you've hailed some of the exploration success that you've had in the quarter. Just walk us through that, because there is a view with greater technology that we're going to be uncovering even more resources in the next couple of years, next few years. To what extent did technology contribute to the exploration success that you've had in this quarter?
Yeah, I think you're actually spot on. I've been quarter on quarter guiding the market towards what I believe is a continuing prolific exploration market in Norway. And this quarter, we've had significant success. And what's really happening is that several technologies are coming together. You're seeing imaging technology from seismic that are improving significantly. Artificial intelligence is starting to play in data mining and data analysis. And particularly, I would say, machine learning algorithms is actually pulling data out of extremely large data sets in a way that humans couldn't actually do. So you're starting to see this, I would say, coalescence of a number of technologies, increasing exploration success and also increasing the number of interesting targets. And then particularly, this is actually focusing on the smaller targets. And that is particularly interesting in, let's say, the Norwegian continental shelf, because it allows us to tie back these smaller reservoirs, 10, 20, 30, 40, 50 million barrels, back to our producing hubs within 12 to 18 months, increasing profitability and making internal rate of return significantly higher than the big exploration games.
And let me tackle one of the other big trends, and that is around the credit environment. And I can see that you've strengthened liquidity, extended out debt maturity profile through fairly successful bond transactions. How significant is the tightening the credit market, and what have you been able to navigate here in terms of the funding environment?
Yeah, so as you pointed out, we raised about $1.5 billion in bonds the last quarter, and I would say that is probably the most successful bond raise we've done in Aker BP history. We saw significant interest. The prices were a little bit higher than we expected, but I would say that this is pointing towards actually significant liquidity, particularly in the American market, and particularly for investment-grade companies. So, to me, it proves that there's still a market for excellent E&P companies with low production costs and low CO2 emissions per barrel.